The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome here to the Diagnostic Trading Hour here. I am your host, Darrell Martin, and if you have any questions, feel free to go ahead and give me a call. Calling in at 877-927-6648. Again, that's 877-927-6648. And the market's not moving much today, basically pulling back. Spain still being the number one catalyst and reason for concern. So that has not changed, and we'll be talking about that a little bit here in a moment, sort of what's going on and how what I called a few weeks ago whenever Draghi announced his whole ECB program and all that stuff, how it was basically a nice cover for him but didn't give any real solution. And investors are starting to figure that out. So let's go ahead and check it out where everything's sitting right now. We got the S&P basically flat, down half a point at the moment. We got the Russell down 1.8 points. We got the NASDAQ down 3 points and the Dow down 57. Natural gas is up 0.012, pretty flat on the day. We got gold down 4 and silver down 0.237, one of the larger movers, 0.68% move down right now. And looking over at, let's see here, we got oil, which is just down 21 cents on the day so far. We got corn down 3. We got soybeans flying. It's been flying a lot lately, down 22, 23 points right now. We got the Aussie. It's actually down 101 pips. So on the Aussie futures side over there. And looking over at the euro, it is up 64 pips. And that keeps bouncing, make that 54 pips. And let's see here, on the spot side on Aussie, it's 89, just to give you a comparison there, but pretty much the same thing. So Aussie dollar down quite a bit, dollar showing strength against the Aussie. Pound dollar up 31 pips, U.S. franc down 39, U.S. Canadian up 4, and U.S. yen up 5 pips on the day. So today we didn't have really a whole lot of, I guess you could say, fundamental announcement news. We have total vehicle sales sort of rolling out throughout the day. And there was a bond auction last night in Britain that went well. They got 1.76. Last time they got 1.86 on their bonds. So not really any big problem there. The Britain construction PMI was a little lower than expected. And that didn't help them a whole lot. But it wasn't just so far off that it was catastrophic. And then the Aussie, they actually lowered their interest rate. And one of the things I mentioned last night is the Aussie was looking at their interest rate. We'll see where it goes. Didn't expect a big change, but their interest rate has been pretty high. It's been up at 3.5. So by lowering their interest rate, they basically lowered the value of the Aussie in the process. And because holding the Aussie now pays 0.25% less. It used to be 3.5. They lowered it down to 3.25. And looking at the Aussie dollar chart, you can see where they made that announcement. And basically the Aussie just dropped right off that right there to 23.5 hours on Central Time. So that'd be 30 past midnight Eastern Time. And they made their announcement, dropped down, and just continued to push on down. So a pretty big move on the Aussie dollar. And they have quite a bit of room compared to everybody else to keep dropping their interest rate. So being up at 3.5 right now, they could drop the thing to 3, 2.75, 2.5. They have a lot of room to drop the value there. And they decided to go ahead and do that to try to further stimulate their economy. And so that was probably the biggest news announcement overnight that did come out, was the Aussie dollar lowering their rate by 0.25%. And looking over at other things, there'll be some more stuff coming out tonight on the Aussie dollar. They have their trade balance report, and that's coming out at 9:30 Central, I believe. Yeah, 9:30 Eastern Time. 9:30 Eastern Time tonight. And what it is basically they're looking for a positive number, and that indicates that they've had increased exports. So if it's a negative number, that means exports are down. Well, the number's been negative, quite often. Actually, in August, it actually was positive by 0.01, and they're expecting it to come in at negative 0.69. And so if that meets expectations, that's not only bad, but if they exceed that, that could be a good thing. But basically, trade and exports, of course, are starting to go down with their exports to economies like Europe, which isn't doing well, Japan, which isn't doing well, the U.S., which isn't doing that well, and, of course, China, which is not doing well at all. And so that is starting to have its toll and effect on the Australian economy, and therefore that's things like that are what's leading to their lowering of their interest rate. And so that could make the Aussie dollar start to come into play to be some good plays, good setups for traders out there that are into the currency markets. And whether it's spot or futures, you could always go over to Nadex. And if you don't have a Nadex account, it's pretty simple. Just go to TFNN.com, okay? And so I'll pull that up for you, and then click on the Nadex banner. Then click on Create Account, and click Start. And then once you've done that, it takes less than, as little as 5 minutes from filling this out to having a funded live account that you can trade. And the reason you trade it is because you don't have whipsaws. So you can go in before these interest rate announcements, put on trades, and you won't get killed in the process. You're going to have risk, you're going to have defined risk, but you don't have to worry about it, again, getting stopped out on the trade. And let me show you what I mean by that. We'll go ahead and just check out the Aussie for this, and I will come back probably after the commercial break here and wrap up a little bit more on it. But I just wanted to, sort of show you what I'm talking about, show you the different opportunities that do exist and different ways that you can do that. But we'll go ahead and let me open it up, we'll log in here, and we'll pull up Forex, and we'll pull up the bull spreads, and we can pull up Aussie dollar, and then you can see the different trades that exist, and which ones that you can take advantage of. And so you could have hopped in there and you could have placed any of these trades that you wanted to. This one was earlier in the morning, but as you can see, let's see here, we'll pull up the Aussie dollar chart again. It did continue to move on down this morning. And so if we want to check out, say, the 7 a.m., we'll just click on 7 a.m. It'll pull up the options there. And we'll look at, what was it at? It was about 0.013. 7 a.m. was 8 a.m. Eastern, so it's right there on the money there. And we could go in and we could actually have sold this bull spread, or what I like to call box spreads, because if you put it on the chart, it actually looks like a box. And we could put it on and had completely defined risk in the process. And, we would have had a pretty limited risk on that trade. Let's see here. If I go in and put it in right now, and 0.02, looks like I had 9.6 or so is about what you could have got filled at earlier this morning. So just to show you where I got that, what I did was I pulled up the chart by clicking on the little chart button right here, so I can look at the historical price of the spread itself. And it got up there to about 0.02196. So if I sold that this morning to trade it all into the U.S. market and traded that, then I could have had a $14 risk on the trade. And right now I could buy it back for about 79. And so let's see here. That would actually give me, just do the simple math there. If I bought back at 1.0279, or actually here, I sold at 1.0296, and I bought back at 1.0279. 17 ticks right now. So right now you've actually doubled your money on this trade because you risked $14. You're up 17 pips or $17 on the trade. Therefore, that's 100% return on your risk, 100% return on, more than 100% return on your risk, more than 100% return on your investment this morning. Trading that, and that's just if you traded this. That's not if you traded the big move, and that's a small move in comparison. But if you would have been trading the big move, then you could have actually came in here, and they started trading at 6 o'clock, and you could have went in and let's see, right around 6 o'clock, which would be 7 o'clock my time, so 1900. You could have went in and you could have sold probably one right around 1.35, and because it would have been up a little bit, so right before the announcement there, 1.35, so having $10 of risk, and you could have rode it literally just straight down, and you would have could have made on that trade, let's just say you got it at 310, all right, so instead of picking the bottom, we'll sort of pick this area right here, this consolidation area, 1.310, and so that'd been about a $60 profit on a $10 risk, or a 600% return on risk, 600% return on investment, in a very short period of time, in a matter of minutes. So, or even hours if you stayed in it and waited for a while. And so a very, very cool trade that you could have taken advantage of. And you would not have the worry, why would you do this versus trading the Aussie dollar? Why would you do it versus trading the Aussie dollar futures? Well, it could have went the other direction too, right? It could have flown up. And where are you going to put your stop at? And you don't know where you're going to put your stop at, okay? So, because you don't want to get hit whenever these big, Fed fund rate announcements come out from different countries. So you can go in there and you have a $10 risk, but here is how it works, okay? if you go in and we put let's say we'll put the rectangle on the chart here, and let me pull that up. You can do this on most charting platforms, and there it is. And so let's say we got in here, like I said, 1.03, 7 or so, and so look at 9 o'clock. Okay, it's probably actually about right here. So if we got in right here, and it's a couple hundred pips down, then if I got in at this price level, and so we'll add that on there. Let's do a simple trend line. Maybe just, yeah, we'll go ahead and just do a price level. There we go. So let's say I got in, like right here at this level, then I can't lose anything outside the box. So it comes into the box, great. Now I'm break even. Now I'm making money. But if it would have went against me in the other direction, I couldn't have lost more than $10. And the thing is, it's a stop loss without being a stop trade. Okay, meaning I can't lose any more than the $10 I put at risk. At the same time, I don't get stopped out of my trade. I actually have until the box or the spread expires. And so, on this box right here, then it would have went to like 7 o'clock this morning, so when the other one expired out. And I could have wrote it down there and enjoyed basically the ability to have a trade on without having to worry about getting stopped out of the trade if it spiked against me. And often, things will spike against you and then go in the right direction. That's sort of one of the pains you have as a trader, right? So you get in there and then boom, goes the other direction. And you're knocked out of your trade, and then right after you're knocked out of your trade, what does it do? It turns around and goes in the original direction you're going to begin with. And I think that's probably the most painful thing, because you were right, but you didn't have time to be right. And so what the box spread does, it gives you time to be right. The trade can move against you while you still have capture risk. You still get that massive leverage, and you have time to be right. And so that's what it would have done for you this morning. And again, you could have played it again this morning whenever it came up. Now that's the spreads. Now the other way that you can place these trades is you can do what's called binaries. So let's check out the binaries and how those work. So over here in the Nadex platform, so what we'll do is we'll go in and we're going to choose Forex, and we're going to choose binaries. Go to Aussie dollar, and we'll choose, for instance, daily. Okay? And so before this announcement came out, we see that the Aussie dollar was sitting like right up at 1.3, say right before the announcement. It was sitting at like 1.0365. So you go over here and you're looking at, what are my potential choices and what could I have done to, place this trade. So let's say we look at the range and we're trying to figure out what we want to do. One of the things, of course, we could look at deviation levels. But if we just look at, how this trade could have played out at, say, 1.03, okay? Maybe not even that high, but you could look at 1.03. Then you could have went in and you could have literally put a trade on for as little as $5. And so what I'll do is I'll show you exactly how the binaries work when we come back from this commercial break, now that we've went over the spreads, which are simple buy and sell. Binaries are a little bit different, and they're a lot of fun. Stay right there, folks. We'll be right back after the commercial break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour. We just wrapped up talking about how you can use an Aussie dollar spread to have traded the interest rate announcement that came out from Australia last night. And I want to go over and do a quick summary on the binaries. We've talked about these in the past. And binaries are a little trickier to trade. They're a lot easier to understand. And there's a few mistakes that people make with binaries, and it's really important they understand how they work in order to take advantage of them. With binaries, it's really simple. Every binary on every market on Nadex, okay, is worth $100. So if your risk is 2, your profit potential is 98. If your risk is 50, your profit potential is 50. If your risk is 90, your profit potential is 10. So whatever your risk is, the difference between your risk and your profit potential, that is your reward. It's always going to sum $100. I can click on any ticket I want to on here, and it will always sum $100 on the risk and reward as soon as I add in the quantity right there. Okay? So that's the simple part. If you buy it, you think that the statement will be true at expiration. Okay? So buy means true. It's binary, true, false, 0 and 1. Okay? So buy means true. Well, what do I mean by true? Well, the Aussie dollar will close above 1.0260 at 3 o'clock Eastern Time. If I think that it will close above 1.0260 at 3 o'clock Eastern Time, I can buy, and that's a true statement. Okay? If I think that statement is false, which means I think the Aussie dollar will be equal to, this is really important, equal to or less than 1.0260 at 3 o'clock, then I sell, because I'm saying that this statement is false, because for this statement to be true, it has to be greater than, so therefore equal to or less than is false, okay? And the nice thing is there's a lot of binary companies out there, and there's a whole list of reasons why you don't want to trade on them. But the nice thing about Nadex is they're an exchange, and they have tiered binaries versus just flat buy-sell binaries. And they have binaries where you can make a lot more than simply a 1-to-1 risk-reward ratio. Most binary companies out there, you can make $7 for every $10 at risk, or maybe $8 for $10 at risk. With Nadex, you can make $95 for $5 at risk, okay? And I mean, just looking at these binaries right here, if you bought this binary, you have $3 at risk, and you can make $97. So pretty huge there. Now, does that mean you should do the low-risk binary? Well, no. The $3 binaries, these $5 binaries, they're really far out of the money, or they're very close to expiration when no movement is required, and they're very unlikely to be profitable trades if, this is big, if held to expiration, okay? Now, with binaries, on most companies out there, and these are not exchanges, these are just over-the-counter brokers and Cyprus and stuff like that, if you go in and you trade their binaries, you put on the trade and you have to hold it until expiration. Meaning either you will win all your profit potential or you will lose all of your risk. But you cannot, come in break even. You can't lose a little bit, make a little bit. Either you're going to win it all or you're going to lose it all. I mean, it's going to be a binary. Either it's a 1 or a 0. It's a $100 payout or it's a $0 payout. Or in many binary company cases, it's a $70 payout or a $100 loss. So what you want is you want the ability to be able to get in and get out when you want to, because these binaries can become really volatile, and that can be to your favor. And so the more volatile ones usually are the ones that are a couple hours before expiration. So that's where like your 2-hour ones, the ones that start like every hour. Like, so they start at like 7, 8, 9, 10, 11, 12, 1, As those are coming up, then you can take advantage of those short-term binaries, and like I said, they'll get very, very volatile for you. But if you want to go in and one of the things you want to do is, you want to look at, your risk reward, your profitability. If I risk $5, or one of the ways I put it is if I risk $500, if I can make $1,000 on 500, would I be happy with that trade? Well, yes. You'd be stupid not to be happy with, making $1,000 on a $500 risk trade. Okay. But for some reason, when people risk $5, they're not happy with closing the trade out for 15. Okay. Think about that. If I risk $5, and if I close it out for 15, I made double my money. Okay, I made $10 on a $5 risk. Well, if I want to make $1,000 on a $500 risk, then I buy 100 at 5 and I sell 100 at 15. Okay, so it's pretty simple. Just don't get greedy and think I want to make the $95, so I'm going to hold it to expiration. I've seen traders. I've done it a couple times and I've learned my lesson. Is you'll go in, it'll be like 5 ticks away from, it's in the money, and then all of a sudden it pulls back on you and you lose. You could have got out, you could have been profitable. And people don't, because 1 tick makes it true or false at the end. But the value will change as it goes up and down throughout the day. And so you could have got on here and you could have placed your trade and figured out, what was going to work best for you with the trade. And so what we're going to do is we're going to look at what are some of the possibilities of how you could have traded these binaries now that we've went over sort of a summary of how they work, and how could you put your take profit orders in right after this commercial break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. All right, so what we're looking at is, we're saying, hey, what would happen if you're looking to, sell the Aussie dollar, and you're looking for different ways to trade that? So one way that we looked at was looking at the spreads. And you could have went in there and, made a decent return on your money there. But also want to look at the binaries when you think there's going to be some big movement, like before an interest rate announcement. So this morning, if we put this chart up here, okay, then we can sort of see, what could have happened on this trade. And what we find out, see, I'm trying to make it where we just see it really well. What we find out here is this is pretty much right here. And we could have got into this trade, let's see here, right around $80, okay? So you can see 83. So about, depending upon exactly what time you got in, then, you're looking at, 86, 85, so about $15 risk on the trade. So if you sell it for 85, you can make money from 85 down to 0, okay? And therefore your risk is 85 up to 100, so you have a $15 risk. So if you have $15 risk, you have an $85 reward. So if I sold it for 85 and I'm looking to buy back for 0, that makes sense that I can make $85 in the trade. So I put it on, $15 risk. Now, if I want to triple, my investment there, basically get a 200% return on my trade, then I need to be able to buy it back for $45. And so, or actually for $55, right? So if I sold it for $15, if I can buy it back for $55, then I've made, $30 profit on the trade. And it goes down, and then right here, within a minute, $55. Okay, 200% return on the trade in a very, very short period of time. So, very easy way to take advantage of that. And I could have came back over if I wanted to continue the trade. Now, if I held it, in this case, it would have worked out well. I would have made the full, $85 on the trade. So, it's moving down. It's looking solid. Now, right now, it's really close. We're talking like 30 pips away from this binary. What I'm looking at is I'm looking at the 1.03 binary. The reason I'm looking at that is that's basically right on a deviation level, okay? So that's sort of, my target where I expect the market to go to is at least 1.03, and it did. And notice how it stopped at the deviation level, and now it's actually moving down and trying to hit the second deviation level. It's at 1.5 deviations right now. So at that deviation level, that's what I expect. I expect it to get this far, and that was a good expectation. As you can see, it got that far and it stayed there pretty much all morning until the U.S. market started opening back up, and then it started pushing on back down, and there would be another possible trade opportunity for me. But on that trade, $15 risk, $30 profit, 200% return on investment, 200% return on risk, okay, on the trade in a matter of minutes. But the big thing is you want to be able to put your take profit order in. So once you enter a trade, and let's see here, I'll pull this back up for you, and I'll just put one on as an example. Okay, so let's say I go in and I sell this trade, and I go in and I put it in, and I'm able to get in the trade for $12 or $11.50 risk, and I hit place order on that trade. I get filled on that trade. Then what I'm going to do is over here in my open positions, okay. Again, that's in my open position section here, and you can see that right here. Click on the little green arrow right next to it. Well, I sold it, so now it's going to give me an order of the same quantity to buy back. Okay, notice how it says buy, where here I sold one, and it's going to quote the current market price when I hit the button. Let's change that to 55. Okay, and I put that order in, and now I hit place order, and now under my working orders, my take profit order is working for me. It's really, I can't stress how important it is when you're trading binaries to put in take profit orders. The only reason you would not put in a take profit order is, let's say you're doing a $50 trade, meaning you have $50 risk, $50 reward. Okay, so you really are looking at it expiring, basically in the money or out of the money, whatever way you're going there. And that's the only reason you not do it. If you're doing anything less than a $50 trade, you need to have a take profit order in. So if you're doing a $5 per binary, 10, 15, 20, 25, 30, 35, you need to have a take profit order sitting there. And it really is even good on the $50 ones to put in a take profit order in, like at least a $3 left. So if you sell it for $50, buy it back for $3, or if you buy it for $50, sell it for $97. So have a $3, give up a few bucks, because that way you can remove all your risk from the trade. Who cares about the last few dollars if you can capture almost all the profit, okay? And remove the risk from the trade by being able to close it out. But always, when you enter a trade, put in your take profit order. When you select a strike, have a reason for selecting the strike. Do not let your reason be, wow, that's only $5 risk, I'll choose that one, okay? Do not let that be your reason for getting into the trade. That is a horrible reason to get into a trade, all right? And this trade here was just an example, of course. That's, demo account is thrown on to show you how to take profit order in. So Aussie dollar is looking pretty cooked and toasted for the day. So, and at the 1.5 deviation level now, starting to move up off of it. So, but I just want to give you an example of how to do that. And, even at this point, maybe you're like thinking, hey, maybe the market could retrace. So, what binary could you trade? So let's just, for fun, okay, go, well, what would that be? If we did take advantage of that, if we want to go in there and we want to do some trades based on, deviations and stuff like that. And we're basically at 1.5 deviations right now, so that put us at a move on back up to like 1.0302. Okay, so not too much further up, but we can look at it and just see. So for some examples here, we're going to hit Aussie dollar. Okay, I'm going to hit daily, and we're going to look at 1.030. Okay, And so if it actually got back up here, this is a $6 risk on this trade. So I'm going to go in, I'm going to buy this one. This is a $5.50 risk now on this trade. Very, very small risk. And I'm going to hit place order. Hit close. Now, I could be greedy, and I could wait until expiration to see it close above 1.0300. It may work for me, and I may get paid for being greedy, okay? But I also could be prudent and wise and go, you know what? If I bought it for $5.50, if I could sell it for $11 higher, basically, if I could make $11 on $5.50, then that means I doubled my money, okay? So $5.50, $11 on that, that's basically selling it for $16.50. So I'm going to click on the open position, and I'm going to put in an order for $16.50. And now I'm going to hit place order. So now, if the Aussie dollar just spikes up a little bit, okay, here in this next hour before it comes up on expiration at 3 o'clock, so it's, I guess right now, what is it, 1:40 Eastern time? It's like an hour and a half. If we just get a little bit of a spike, this thing could easily become worth, $16. And if it does, even though it doesn't sound like a lot, that is me doubling my money, okay? So there's no reason not to do it like that. I mean, come on, that's double your money. And if you want to make more money, don't get greedy and make the thing move further. Don't get greedy and hold on. Do more contracts, okay? So, go in and do 10 contracts, 20 contracts, 100 contracts, whatever, and take advantage of that. Now, we also can look at the shorter time frame. We got 1 to 3 o'clock here. And we can see if there's one that we like that's, really good. There's a 1.2087 for $20. So we can put that one in. We do think it's going to go above that, so that's a trade you can go in and you could buy that one for $20. And you can put it on here for $20. You can hit place order. So as long as it closes above 1.0287, we actually would make 80. We're not going to be greedy. We're not going to wait. Okay? We're going to go on here and we're going to say, you know what? If it gets to 60, if it does a little bit of a retracement, then I'm going to get out. I risked 20. If I make 60, I doubled my money. If I'm just right 1 out of 3 times, I'm break even. Okay? So I don't even have to be a great trader. If I can be right 1 out of 3 times, I'm break even on the trade. And so that's sort of an example of what we're looking at. Now, do I think that's the most prudent trade, wise trade? No, that's why we're doing that in the demo account, showing you how it works. But, we're at a 1.5 deviation level. I like it reversing, if I'm doing reversals, if you listen, I like reversing at, maybe 0.5s if everything's going slow. Possibly 0.7's a lot higher, and then 1s are my favorite area to do any kind of deviation reversal off of them. And so you can take advantage of those, and you don't have to hold the thing to the end of the day. So again, even on the dailies, you can pick some of those, not so expensive ones, and as long as you put your take profit order in, okay? So, if we go up and we pull that 1.03, because it got there earlier today, right? It was like sitting there, and it was like literally, here's 1.030 right there, 1 deviation there, and it keeps coming up off of it over and over and over again. So what could have happened at that time? How could you have taken advantage of that when it was sitting at 1.0300? Well, if we go over here and we look at it, and I'll zoom in, you can easily tell when it was at that price, because basically it's going to be worth $50 at that price. Okay? Then you can see that all the volatility in here, it's $20 up and down over and over again. Well, I didn't have to choose that binary. Okay? If I'm just trying to do small oscillations, which is like where I'm trying to buy for 5, sell for 15. So maybe I went in and I looked at the 1.03, 60 trade. So if we look at that trade, and go, well, how does that one look on here? And we go, okay, well, what time? We're looking at around, let's see here, 1500. There we go. Yeah, there we go, $50. Okay, so we're looking at 10 o'clock. So 11 o'clock last night on this trade right here. And, what could we have done to, take advantage of this trade whenever it was moving like that? And we can see, let's see, it's pointing back to 2200 on us. If we get this morning, you can see the big movements going up and down, and that doesn't seem like a whole lot, but you're looking at $9 up to $20, back down to $9. So, and even right down here, you're talking a move from, let's see, I'm at $3 up to $10, okay? In a matter of, an hour or so. And we'll even see it in less than that on the shorter term binaries. We go over here and we look at some of these binaries over here, and you'll be amazed just how fast these things will move, when the market's oscillating. And, the thing goes from 40 to 14. It's back up at, at 10. It's up at 30 right now. Okay? Dropped down $10 already off of that. So if you would have got in at, 10, you could have got out at, say 30. and you could literally just play these small oscillation moves on the Aussie dollar, and with the short-term binaries, and just going in for 10, getting out at 30, going in for 5, getting out at 15. So you definitely want to do that. You can see the big spikes as this movement goes around, and I mean that's not a huge spike as big as it looks. So because really that's, there we go. But I mean it's very, very small incremental moves, and take advantage of these very volatile instruments even during flat hours. So you can take advantage of during flat times on currencies, and the less time they have to expiration, and the closer they are to the strike, the more volatile they're going to be. And so you can go in there and watch something move from 5 to 15, 5 to 20, 10 to 30, and then back down again. You can literally play it over and over and over again. So I just want to bring some different ideas and different ways to trade binaries to you to let you check those out. They're a lot of fun to trade, but if you're not using take profit orders and you're not having a reasonable expectation of where it should move to, not based on what you want to make, based on more objective parameters like the volume, real price, like Tom O'Brien teaches, if you're looking at deviation levels, things like that. So if you're not looking at those areas, then it's going to be a little bit harder to trade them. They're a little more statistically, technically based than one might think. Okay. Now the spreads, the great thing about them, the box spreads, they're not calls and puts, and they're not credit spreads and debit spreads. They're really just a instrument that you can use as a way to supplement, to replace the underlying market. So you can trade the Aussie dollar, you can trade the S&P E-minis, the Dow, the NASDAQ, oil, natural gas, gold, silver, copper, euro dollar, pound dollar, corn, soybeans, all these different markets you can trade with really low risk, real completely capped risk. You can't get whipped out of trades, and you can buy them just like you'd buy or sell just like you'd sell the underlying market. And to me, it's the best way to trade out there, because you get to trade like a trader, like a normal buy-sell trader with the spreads, but with the defined capped risk. So you can't move your stops against yourself, okay? And you can't get stopped out when it hits you. You actually still have time to be right and it move in your favor. So just a few different ways to look at things, and I want to go over that with you, just give you a little bit of a lesson on binaries today. And anytime that you have questions on these binaries, you're trying to figure it out, hey, I'm starting to put the pieces together, but I'm trying to figure out what to do next, then just give me a call, let me know here at 877-927-6648. I'd be happy to answer your questions for you. That's why I'm here each and every day, to help you learn better how to trade on Nadex, how to trade the markets as a whole, and how to look at fundamental, seasonal, statistical, and fundamental, seasonal, statistical, and basically all 4 areas of diagnostic trading. And I was going through a lot of different things today, and I want to go ahead and look over at Spain as well. And on Spain, we're talking about they're basically delaying this bailout request, and that's the fundamental part. And you got to look at the fundamentals, and you got to check out where they're going, what are you doing, what government news announcements are coming out, and you got to look at the statistical, that's the deviation levels, how far is it moving. You got to look at the seasonal. And you got to see, okay, what patterns are emerging that I need to be aware of, that historically, does the market generally go up or down? Today, this week, is there a reason for that? Those are the best seasonals when there's actually a reason behind it. And then, technical analysis, does it line up? Well, Spain is delaying the bailout. They're saying a bailout is not imminent, which means it could happen tomorrow, could happen in 5 years. And the thing is, by Mario Draghi's big announcement of, hey, we're going to lower interest rates, or not lower it, but we're going to buy as many bonds as we have to with an open-ended, buying, then Spanish bond yields went down. So they don't have any urgency. The only reason they need a bailout is because their yields get so high, and they don't have any urgency to, hop on board. And there's already riots in the streets in Spain. They don't want to go through all this stuff. They got part of their country actually trying to pull away and become their own country again. So hold right there, and we'll talk a little bit more about Spain and a couple other things when we come right back from this commercial break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, welcome on back here to the Diagnostic Trading Hour. And we're just wrapping up talking a little bit about the Spanish bond yields being a little better than expected. And basically, it's not a big surprise. It's based on what Draghi said, hey, we're going to buy unlimited bonds, which has led to Spain not having to ask for a bailout. And it was really interesting because he said, hey, we'll provide unlimited funds for bailouts to everyone so long as they meet our requirements. And Spain basically elected everybody they just elected based on not having to meet those austerity requirements. So the chances of that happening are, of course, very, very small. And the country is already riding over even the potential of that happening. And like I said, there's actually a section of Spain that's trying to actually get basically separate itself from Spain. They want to become their own country, their own province again. So they don't be dragged down and put all the federal income taxes into a failing economy, which you can't blame them for that part. But, it's really interesting. We talked about, hey, what's going to happen is eventually people are going to figure this out. They're like, hey, Spain needs a bailout. They just don't have to get one because the bond yields are low. And eventually, when everybody figures out that they do need one and they haven't asked for one, they're going to stop buying their bonds. And then the yields are going to go high. And then it's going to be interesting to see whether or not Spain decides to ask for one or not. Because if they do, not only do they have to ask first, so they have to ask nicely, right? And then they have to agree to the numbers that basically, whatever austerity measures that the EU wants to put on them. With the new European stability mechanism and everything else, and do they even have the money to bail them out? I mean, $1 trillion in debt. Do they have the money to bail that out? No, they don't. So as the obvious starts to become obvious to others, it'll be interesting to watch and to see what that means across the board, and will that bring down the EU as a whole? So. And then right now, just checking out, a few things to look at over here and wrapping up on the market at the moment. We see that just doing our quick market wrap here, the S&P is down 2 points now. It was pretty much flat. The Russell is down 2.3. NASDAQ is down 9. Got the Dow down 66. We got copper up a little bit and 0.008. We got gold down $7. We got silver down 30 cents. We got oil down 48 cents right now. We got corn down 4 and soybeans down 24. We got the Aussie dollar down 96 pips now. And we got the pound dollar up 21 and the euro dollar up 39, along with the U.S. franc down 36 and the U.S. Canadian up 7 and the U.S. yen up 9. So that's pretty much, your market wrap on the markets across the board. And the last thing to look at, saw an interesting story on Apple. Their new iPhone 5 has a chip inside of the charger. And so it's going to make it very, very, very difficult to duplicate, so you won't be able to buy those $1 chargers anymore off eBay. And so far, nobody's been able to duplicate it. And because it has like a verification technology built in that blocks it from working if it's not there. So, kudos to Apple for protecting their content. That sort of bites because you got to pay $30 for a charger, but that ought to at least help out their shareholders and make them some more money in the process. Looking on over, what do we got coming up tomorrow? Germany has a bank holiday. Okay, that will lighten volume a little bit, at least overnight, and then there'll be Spanish and Italian PMI coming out. Britain's services PMI is going to be the big number coming out. This needs to be above 50. It's been above 50 recently. So should not be a big system shock right there. It really hasn't been below 50 for a while. And then looking over, we have the big number, 8:15. Do not forget about this one, 8:15 Eastern, ADP non-farm employment change coming out. Okay, that's going to be everybody's going to be watching that to see how they think Friday's number is going to come out. And then the 10 a.m. ISM non-manufacturing PMI at 10 o'clock. And then that'll be followed up by crude oil inventories. So, anyways, if anybody has any questions, feel free to send me an email, dmartin@tfnn.com. You all have a great day, and I will see you on the show tomorrow.